Well, joining me now for a look into the day's market scene is Annatjie Van Rooyen from Regenesys Business School. Annatjie, hi, good to chat to you on the close this evening. It's been an interesting day on the markets. I mean, the all share down. What do you make of the general picture and what you've seen so far?
Good afternoon, and thank you for having me on your show. Yes, on the markets today, we continue to witness the volatility in the prices of precious metals and tech stocks like we have witnessed over the past nearly 2 weeks now. And the prices of these precious metals and the tech stocks have actually all moved up very fast over the past year and probably outpaced fundamentals in the short term, especially with the latest AI disruption being factored into the software space. The volatility has further been underpinned by a more hawkish jobs report in the US earlier this week. So I think what is really spooking our market today is the fact that we are seeing a rotation into US treasuries, which we haven't seen for quite a long time.
Yeah, and those tech stocks as well. I mean, I saw, looking at Apple, some of the other ones, they took some heavy water last night, and it just goes to show how fragile that whole AI tech market is at the moment.
Yes, it's actually not only last night. It's been a bruising 2 weeks now for the large US tech stocks. And a week ago, the large companies in the US, the tech stocks, announced this a combined $650 capex spending plan. And I think investors are now concerned about the future returns on these investments, and also investors are further concerned about the advanced new AI tools that can displace the traditional software products and subscription models for the software firms. So the current narrative is questioning whether the future earnings can justify the current valuations, and this has resulted into that rotation into US treasuries. Yeah. So these stocks are unfortunately re-rating at the moment, because if we are going to see slower growth or rising competition, it will weaken the margins and the cash flows of these companies. And we know that all these companies are trading at quite high multiples.
Yeah, they certainly are. Right, we've got our precious metals. We've got the Rand as well, also not having a good Friday. Because once again, gold has been the safe haven and the Rand has benefited, but you can see both under pressure.
Yes, look, the Rand has over the past week been trading slightly weaker against the major crosses. And as you have rightly mentioned, this is due to the lower commodity prices, but also due to adverse global risk sentiment. I also don't think it has anything to do with Sona. It was well received by the market and well within the expectations of investors. And the Rand still remains underpinned by solid fundamentals, but we do need positive investor sentiment around emerging markets. So the global risk of sentiment is not boding well for the currency.
So it's global. But it's interesting, the general sentiment after the State of the Nation address, bar a few political parties, but all round seems to have been the thumbs up.
Yeah, I think it was within what was expected, and if there are any questions, I don't think they are major, and we all know that it will be clarified during the budget speech next week. I think the most important one is probably the transmission company as part of the restructuring of Eskom. That will now be an independent company, and investors might be concerned about any challenges that the partnership with Just Energy, the European partnership, might face because of this change, but we don't have enough details about that. But all in all, I think it's a very positive outcome, and I think it'll take something major to take South Africa off this road or path of construction and positive momentum that we're currently experiencing.
Yeah, quite right. Cell C on the close tonight, speaking to George Mendes, who's the CEO of Cell C. They're celebrating. I mean, they listed just last year, and here they are now, and they've done pretty well so far. What's your take?
Yes, look, these results, it was a solid set of numbers, but it's clear that they are in a transition phase. And the positive momentum of the company, I think a large part of it stems from the debt to equity conversion as part of that pre-listing restructuring. But some of the key metrics that stood out for me was the data usage that surged by 42.7%, which is underscoring data as Cell C's primary growth engine. The subscriber numbers were also impressive at 8.6 million. But the key theme throughout the update is the balance sheet reset. And this is mainly due to that pre-listing restructuring. So, going forward, we'll definitely monitor this one and see what the operational performance looks like. And they also did say that they do expect stronger numbers in the second half of the year. So definitely one that I think should be on the radar.
Yeah, well, let's wait and see what happens. Right, Annatjie, what is your stock pick then?
I'm sticking with something on the local front, Naspers, which is, we all know, diversified across many different industries and also many different geographies. And we've seen many acquisitions during the first half of 2026. They've made acquisitions in Latin America, in France, and also the process acquisition of Just Eat in Europe. And the repurchase program is continuing. Plus, we are seeing disposal of non-core assets, which should bag another $2 billion in financial year 2026. So the disciplined capital allocation model of this company and the strong balance sheet continues to support the strong investment case for Naspers.
Yeah, Naspers has been quite popular this week, I must admit. Annatjie, thank you so much. Good to chat to you on the close. Thank you. And that was Annatjie Van Rooyen from the Regenesys Business School.